Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, here we are on Friday, January 24th. We're going to take a look at apps Digital Turbine today. So we haven't looked at apps in a very long time, and somebody left a comment and requested it. Took a look. It's actually pretty interesting. So we'll go through it here on the Webull chart. We'll give it a couple looks, and then we'll look at it on the Thinkorswim setup and call it a video. Now, like I said, apps was requested in a comment in another video. If you have a ticker that you'd like me to take a look at, please just drop the ticker symbol in the comments below, and I will do my best to get to it as soon as I can. The more interesting it is, the sooner I'll probably do it. I try to get to all of them no matter what, anyway, even if they net me a whole 6 views or something. Now, we've been playing around a lot with fib extension levels lately and sort of seeing how they line up with supply and demand or support and resistance levels that I would put on the chart anyway. And when they line up well, I'm like super happy to do the fib and sort of like test it out and see how it goes. This looks like that to me. So I put in fib extension levels here. We'll zoom in a second and see how it's treating those fib levels through this recent climb. But we see here, if it does get legs, we have this gap here, and this gap gets filled at about 291. Right, so it's getting darn close. The thing I liked about the fib extension levels as I put them in was you see the level 328 or so here coming through a brunt of the previous price action. And well, it's going to nauseate you if I scroll back and show you, but also it sort of accounts for a run through the gap and sort of retesting some of this motion here where it tried to briefly recover before it did a gap down. And so, to me, that's often what I look for, whether it's filling a gap to the upside or the downside. If it's going to really make a gun for it or a knife for it, if it's coming down, the prospect of it just sort of filling the gap and getting within a range of filling the gap and then retreating from it. So in other words, coming up to fill the gap like here and just sort of hitting like 3 and coming back down. I'm not saying it couldn't happen, but oftentimes there's enough momentum in that direction that it does have some additional carry through, right? To have it fill such a huge gap. I mean, the gap that was left here was because it went down 44.75% that day. Right? That's a massive gap in there. And we'll look at the volume positioning in a moment. But same thing to the downside. If the stock was coming down into this gap, I would say just be cautious if you're looking to buy in as it's filling the gap. Oftentimes, the momentum created to the downside to fill the gap can carry it even further. And so I like that the fib sort of accounted for that really well. Like it's tight into the gap, but it's enough of a run room that makes sense and does line up with the previous price action surrounding that gap. So if it does come up and fill the gap, in the gap, we have 265.5 here, so I guess 266. And then, like I said, 328. These fractions of pennies always annoy me. And then if it gets really leggy, 428, 529, and 591. And we can go beyond there if we want. Now the other thing you see here is that it counts in the same way basically for this gap fill. This gap was when the stock came down this day 24%. And this is way up here in the approach to 5 basically, so the high 4s, partially filled back here, right? And then it lost it. So I guess I would also say just be careful. Just because it's in a gap doesn't mean that it has to fill it. Anyone who bought in here as it got into this gap and was like just crystal clear positive that it was going to fill this gap, got bagged. Especially if they got bagged when they were down here for sure. But then, if they held till it came all the way down here into the dollars, they got absolutely trounced because they would have bought it here like in the mid 4s. And so just be cautious because it is in the gap now. And I know we're talking about if it fills the gap, but just remember the last gap it had here, that's what it did. Came up, partially filled it, and then it just absolutely crushed gap buyers. Now there is this other gap here, right? This day that it rose 61%. Right? So just crazy numbers that we're talking about here. And with this recent price action, it has filled that gap. So there's something else to keep in mind. So gap. But these are the levels. Now, if it does pull back and it doesn't come through and doesn't fill this gap, doesn't get to that 327, 328, let's zoom in and see what we're working with here. So you see how it's working off these fib levels intraday, right? So this gives us a really clear view, bouncing right off of that 165, coming up and wrestling with that 188, wrestling with that 203, working its way through it, right? Just see how methodically it's working through. But this is just to say, if it does retreat and it can't hold that 244, we're looking at 227, 215, 203, 189, I guess, and 165 to the downside. Zooming back out here, I don't know if we have, yeah, that's the lowest level we have at the moment, that 165. So, we'll see how it evolves, but this way we're covering a lot of ground in both directions, especially percentage-wise, right? The percentage down to 165 is a lot. The percentage up to 591 is a lot more. And so, yeah, we have a lot of ground covered, but that's a good thing. Now, let's hide these for a moment. Let's take a look at the EMAs. This is what makes it additionally interesting to me, not just this gap, but, the gap fill lines up a bit above the 183 EMA. This, if you've watched my recent videos on like trend reversals and stuff, this is actually my favorite setup. EMAs bullishly crossing over while it's under the 183 EMA, and the short terms have now fully bullishly crossed over. The question becomes, can not the price action, not the candles get through the 183, but can the EMAs, can the 821.34 get dragged through the 183 EMA? Then we could be looking at some really nice motion. You see here, right, when just the candles make the motion, it's not enough. Or even just when one of the EMAs makes a sort of half-hearted break above it. Not nearly enough momentum that's needed for something as significant as a trend reversal. I feel like 5-10 years ago, trend reversal was like everyone was talking about such and such stock reverse trend. That it became such like buzzwordy. But people forget how hard it really is for a stock that's been under such duress for such a long period of time. This is the chart. It's really hard for a stock like this to reverse trend. And so something like an approach toward the 183, right? You see how many times it comes sort of near it, but it can't even get there. And then when it does finally get there, it cannot drag the EMAs through the 183. So price action or candles be damned. I'm looking for the EMAs to get dragged through. Now, does that mean I'll catch the bottomy bottom and I'll sell at the tippity top? No, but that's not my goal. I don't think it should be your goal either, because you're just going to frustrate yourself that way and get yourself bagged more often than not. Catching as much of the move as you can within your sort of risk tolerance as many times as you can, it's going to keep you in the game for a long time. And it's going to deal you some losses, but if you can keep those controlled, then you're going to be okay. So that's what I'm looking for here. But this is my favorite trend reversal setup, and the gap being here where as the price action is doing this with these EMAs is just sort of like icing on the cake to me. It has me very, very interested in what apps could do here. Now, it could bang into the 183 and just reject it wholeheartedly, like we just talked about, right? It had this like partial gap fill before and then retreated and just absolutely knifed. But that's why I'm looking for the EMAs to get through the 183, not just the price action, because the price action will fool you. It's really hard to get through the 183, and even if it looks like it is over the course of a day or a couple days or maybe even a week, it's really hard to sustain it. Again, especially when a stock looks like this. Okay, now volume. let's go into our, let's add the gaps in here, right? So we have this gap up here, and obviously this gap here. So we see all the shelving here, right? So we're in the shelving for sure. We're at what, 240 something? Yeah, so we're right about here, and some big potential walls ahead. We'll see what that looks like. But then, as the walls break down, if it can get up through here, this is where we get really thin volume and potential for just maybe sort of some masterful maneuvering, especially if whatever forces there are that could keep apps or create some more bullish momentum behind apps, if those can come through, especially around the right time, this could be an interesting confluence of events. So I know I'm sort of requiring a lot there, but so it goes. So bad news or other news. A lot of large scale orders just coming out. So out the last 5 days. So for whatever reason, that's happening while we're still seeing the price rise. So we'll see if that has much or any bearing. And I was actually surprised to see this 81% total profited shares proportion at after close as of yesterday. I was surprised it was that high, but I mean, I guess that's just sort of, how long that it's spent in this period below like 225. I guess then, okay, kind of makes sense. But, and I guess, maybe it's a good thing a bunch of people aren't continuing to hold through maybe carrying those bags that we talked about before. Insider activity here. We have a decent run of things coming through in December. So we'll see how that sort of plays out. But yeah, I hadn't looked at this before, so I'm just sort of catching this now. But some selling coming in through December. It's hard to read too much into those things, especially when there's so much here, and nothing is like in a gravely concerning number to me. So, that could be folks, I mean, who knows, shoring up funds for the end of the year, doing something for tax purposes, buying a house. I mean, you just don't know. I was previously at a startup that has since IPO'd, and it's just people forget that like insider selling or whatever doesn't always just mean, everyone knows that the company is going to crap. It can just mean that people want to cash in on money that they've been counting on and working hard for a very long time. And that was just always a lottery ticket, right? So that's my view on it. You don't know. Sometimes the trends seem more obvious than not, but this to me looks like it could just be sort of benign activity. Now, on the thinkorswim side of things, here's what's a little bit interesting as well. We see this lengthy trigger and then a fire, and nothing happened. Now we get this re-trigger, and now the refire starts as it's starting to climb up out of the channel. We haven't had out of the channel action since back here when it hit that low, and what preceded that low was this lengthy trigger, and then it fired, and bang, down it goes. It did hold that fire for quite a long time before it banged down, but when it banged, it banged. That's that day that we were talking about that went down 44.75% in November, right there. So yeah, so I also love me a good re-trigger and refire. So there's just a lot of things. I'm resisting every urge that I have to jump in prematurely because it's my favorite kind of setup. Though the setup, the buy signal that I would consider is not there yet, right? So that keeps me out of it anyway. But that plus the re-trigger and the refire, plus the gap, being there and having additional gaps up above, yeah. It has me pretty interested. Now, why those large-scale orders are continuously coming out, I don't know. Why there's a little bit of insider selling, I don't know. But it's certainly interesting. So we'll see what that all sort of accumulates to, if you will, in the coming days. There's also the looming earnings report coming up. So we'll see how much, if it does continue to climb, how much maybe folks feel that on par or even relatively decent earnings aren't good enough for the recent climb in price, or if it's taken as another reason to put your pedal to the metal and punch the gas and take it up higher. Who knows? But that is sort of like looming. It's not super imminent, but a couple weeks in the future, and we will get that earnings report as well and see if that boosts any of this motion in either direction. All right, folks. So I hope that you had a nice trading week and that you enjoy your weekend. And as always, I appreciate you watching, and I will see you in the next video.